This podcast is brought to you by SDBullion.com. I've known the guys since 2011. I trust them, and so should you. New customers can get physical metal at spot by visiting SDBullion.com/spot. Welcome back to your TF Metals Report podcast highlights for the week of November 11th through the November 15th of 2024. Very challenging week for the precious metals. The week began on Monday. Prices were hammered pretty sharply in both gold and silver. We didn't know that gold would end up going down every single day of the week. But as we began our podcast week back on Monday, we were looking for support levels. We knew that 2620 was going to be important if it could hold. But failing that, we'd be looking at something closer to 2560. Well, let's hope we don't get there. By the end of the week, we would get there. But on Monday, we didn't know that. That was all part of our discussion as the week began. Again, gold on the daily chart, smashing through its 50-day today, which is obviously a sign of negative momentum. And now you're going to have some machines that are, again, rigged to sell the rally rather than buy the dip. And you can see the buy the dip, since the 1st of August that we've been above the 50-day. 2620, that's the lows from early October. That's also the level that was resistance for about 5 days in the middle of September. So this is where you'd like to see it bounce. And if we can somehow turn and rally with light inflation numbers, CPI Wednesday, PPI Thursday, we get Chief Goon Powell on Thursday as well, maybe we can bounce, maybe we can get back above that 50-day by later this week. And old turtle will feel a little bit better in the short term. But right now, I don't know. I think we got too many things working against us. So I think it's more likely the dollar probably extends, rates go a little bit higher, the banks are able to flush out even more longs before the December contracts go off the board in 3 weeks. And in the end, we end up down here near that blue line, those two blue lines really, around 2560, 2580, 2550, something like that. Now, that would also be about a 50% retracement of this whole move from 2360 up to 2800, okay? There's a lot of reasons why you might be looking for support down in that level. I've got a sneaky feeling that's where we're headed. I'm not looking to buy the dip until we get there. I think that's probably where we're going. Now, again, we might turn maybe tomorrow, rally later this week, get back above the 50-day, and that'll change how everything looks. But right here on Monday night, November the 11th, I think we have another wave of pullback before we finally kind of consolidate in this area between 2580 and 2560. The selling across the sector continued on Tuesday the 12th, but silver seemed to moderate a little bit, finding support where we would hoped it would find support, around 3050. So here's a look at silver and what we discussed, again, Tuesday the 12th. And then you look at silver. Silver's doing exactly where we want to find support. As I suggested yesterday, it may lose support here and go to 29.50. And if it does, I'm going to have to hit the ATM again. But this is, again, 30.50. Resistance, July and August into September. Support in September and October. And here we are. This is where you want silver to bounce. And the fact that it did today, when every incentive was there, dollar index up another 50 cents. They could have run it, and they didn't or couldn't. And it bounced instead with a little hammer thingy. It's a good sign. And boy, oh boy, the metals are getting shellacked. The mining shares are going to be taken in the shorts as well, on a far worse percentage than precious metals itself. Boy, very frustrating. Always seems very frustrating in the mining sector. No different this week. So on Wednesday the 13th, we took a look at the chart of the GDX as a proxy for the large cap mining sector. It's a pretty gnarly chart, and it was a pretty gnarly podcast on Wednesday the 13th. Again, the GDX. I put the little NEM bubble on here. That first big red candle, that was the first sign we had a problem brewing. That was a day of Newmont's earnings. Killed the sector. You think about Barrick's earnings last week that came out, Friday? Look what's happened this week from 39 down to 36. 10% down so far this week? So between Newmont, oh man, this sector's terrible. I better get out. Well, hang on. No, look at Barrick. Oh, that sector's terrible. Those two freaking companies are the absolute bane of our existence and the death of the sector because they're the bellwethers that every stockbroker and everybody thinks about. And when they go down, when they have shitty earnings, when they can't control their costs, everybody just naturally assumes every miner can't control their costs. And that's how you end up down 20% in 3 weeks. Remarkable. And at 35.56, that's the lowest close since what's that, August the 5th or 6th or 7th? It looks to me like the GDX is going to 33. Remember, that was the key level that we had to break above. That was a key level that we came back and back tested in the middle of June. Who's to say we're not going there now? Gold goes to, dollar keeps plowing through to 107, 107.5. Gold goes to 2,500. Silver goes to 29.50, maybe even 28. The GDX goes all the way down to 33, from 44 to 33. Even I could do that math. That's 25%. Unbelievable. So why have the precious metals and the mining shares had such a tough time since the election of Trump? Well, it's a combination of things. The market is assuming that the economy is going to be strong under Trump, and so the bond market is selling off with higher interest rates. The market's assuming that extra inflation will come on because of that strong economy, and so the bond market is selling off and higher interest rates. Well, with higher interest rates comes a rising dollar index. Dollar index now up 3.5 points since the election of Trump just 6 or 7 days ago. That would have beaten the crap out of the metals regardless of everything else that's going on. This kind of a sharp rally just brings too much pressure to bear, especially during COMEX hours when the trading machines see that higher dollar and just respond almost reflexively by selling COMEX gold and COMEX silver. So we got to watch the dollar chart. Hopefully it'll roll over here soon. But boy, as you can see on this long-term chart, this has been quite a rally. So where does that leave the dollar index? Well, you can see it's all the way back up here now to where it was in October and November of last year. I'll remind you, gold was $1,800, $1,850. All those price, 30% lower, 40% lower than where we are now with the same dollar index level. But I also want to show you the RSI. If you went across here, 74.5 for an RSI is about where it peaked out back there in late September last year. Again, when we got up to these levels. And that was about as much as it could stand. We didn't even get that high back in April. We didn't get this high. We were close back here in late October after that huge rally in, 3 weeks from 100.5 up to almost 104.5. Anyway, this is clearly overbought, potentially divergent. We're kind of getting up here to the same level, but this thing has rallied another 3 points, same level on the RSI. So this is another, we'll be watching this. And this suggests that the dollar index got to at least take a break like it did in the month of October last year. It went sky high. See that from the middle of July to 1st of October? Okay, this is from the 1st of October to the middle of November. And then it went sideways. Okay, because it just ran out of momentum. That's even just going sideways would help us. And on Friday, November the 15th, the precious metals concluded a rather dreadful week, one of the worst weeks we've seen in the precious metals in a while, particularly in gold. Gold down almost $130 after being down every single day this week, while the dollar was rallying every single day this week. Silver performed relatively better, but that's only because gold was so bad. Silver down over $1. And on this updated daily chart, you can see where silver was finding support Tuesday through Thursday at the 30.50 level on the December contract. Now, that's a logical place for it to find support because that had been resistance, top of the head, if you will, in a head and shoulder bottom that played out from late July to early September. Unfortunately, after trying to rally today and getting all the way to nearly $31, silver was hit hard even though the dollar fell backwards and finished the day at 30.32. So now that it's below 30.50, oh sure, it could bounce and maybe it'd be a perfectly logical place for it to bounce. But I sense we may still get one more sell-off next week. There's not a lot of data coming next week, so it may just be one more surge in the dollar, surge in interest rates, with silver puking down to $29.50, briefly trading under 30 just to kind of freak everybody out. That level, that's where I would expect a more substantial bounce. And then maybe we can at least move sideways through the December expirations and then see if we can't crawl back above 30 and finish maybe 30, 31, something like that by the time we wrap up the year at the end of December. That wouldn't be a bad year. Wouldn't be a bad year at all. So maybe that'd be something we can root for. But for this week, at least it's over with. We can turn our attention to next week. Thank you for listening to the TF Metals Report podcast highlights. Schedule's been a little inconsistent lately. We'll try to have another one next week. I don't know. We'll see. We'll try to crank these out as often as we can until we have another one. Thank you for listening. Have a great weekend, everyone.